Our banking system needs reform, and I think the best solution for reform is through economic growth and a stimulus package. If we don't have a stimulus package, our banks will continue to go down because property will fall in value, loans will become worth even less, NAMA will fail. So the more property falls in Ireland because of the size of property in their balance sheet, they have to, no banking resolution scheme or any other scheme can possibly solve that. So the first thing in solving our banks is, I think, economic growth and some sort of stimulus package. So it's necessary to do this, but raise taxes and expenditures and whatever. So we'll just go back up here. Banking structure has changed in Ireland. There are far fewer banks, and this has implications for lending. One proposal for other countries is to separate utility banking from casino banking. In Ireland, we don't actually have casino banking in the sense of investment banking. We have casino banks, but they didn't engage in investment banking, trading, etc. So I think that's really not terribly important from an Irish perspective. We have utility banks. The problem with the utility bank, though, is that it does lots of different things. It does all these different things that Irish banks and Bank of Ireland do. So I think what we need is a loan guarantee scheme organised by a separate institution. Why not use the existing banks? Because there's a danger that they will replace funds on the loan guarantee scheme with existing funds. So a small business will go on to a bank and say, we want to use this loan guarantee scheme. They say, grant, you can do that, but you have to draw down and pay back your existing debt, and we will replace this with a loan guarantee scheme. You won't get that with a new institution. Like what I'm arguing is that there should be a new dedicated institution, which is not confused like mortgage lending or insurance or anything else, any other product. It just dedicates lending to small business, medium-sized enterprises. If you like, recreate the old ICC. This is and indeed the ACC. And I think this would be a possible solution for going forward for our banking system. Thanks very much. I'm sure
you chiming in with what Jim was saying there, I think in some ways there needs to be some sort of state investment bank or new state bank needed. I think certainly when ICC was so tough, there is that gap that was never really filled, and I think that needs to be done. I know there's been a number of proposals. I know the Labour Party put forward a very comprehensive proposal on a state investment bank, and I think certainly within the trade union movement we would chime in, or within sectors, where people sit to here, that that we would support a lot of that. Certainly, I suppose in terms of the use of the National Pension Reserve Fund, in terms of using some of those monies to initially capitalise the bank, I think from the trade unions, though, we would argue that even more money should be used within the National Pension Reserve Fund for actual direct lending, or that you would leverage those funds for direct lending. So beyond the initial startup of the bank, that you would also try and use some of those funds within the National Pension Reserve Fund for ongoing lending to infrastructural projects and to small and medium enterprises. So just to conclude, I suppose certainly when I look to the UK Commission on the Future of Banking, and it's only something that I just came across in the past few days, and I have a very, I suppose you might have a much better knowledge, Michael, of this, in terms of what the UK Commission on Banking, certainly in terms of they're looking at what we need from the banking system into the future, and certainly there's streets ahead of the very limited thinking here, which has very much been to plug the losses, and we haven't had a grand picture of, we haven't had any picture or any vision forward of what we want from the Irish bank. I think the second thing, just to conclude on, and Vermont Mary touched on it earlier, and I think it's it's a very thorny issue, but it's something that we do need to look at, and that is the issue of restructuring, both with regard to personal debt, but also with regards to businesses. And this is an area that hasn't really been talked about in Ireland over the past number of months. clearly any sort of debt restructuring in terms of a debt write-down has major implications for the Irish Bank, and we need to debate on that. But certainly, 90% of my job is with regards to policy, but there's about 10% where I have to go out and audit the account, not audit, but review the accounts of companies that are in trouble, that are looking for pay cuts or looking for redundancies. And certainly I see an awful lot of companies who, they have made huge efforts in the context of the downturn to try and scale back their activities, and they've managed to remain viable in the context of a huge decline in their turnover, and they've managed to remain viable up until you get to that point in their balance sheet when you see their interest. And there are so many Irish companies out there that were excessively geared during the height of the boom and are now suffering those effects because of the massive interest bill. And in order for these companies to be viable into the future, in order for them to expand and to survive, we need to be able to consider in this country some sort of debt restructuring for companies. And of course the same then goes for households as well. I noticed that this is was put in place in the UK a number of months ago, and certainly it's something that I'm only beginning to look at myself, but I think it's a debate that needs to be had. So I'll leave it there.
Great. Thank you very much for what was a series of very, very useful contributions, and I'm sure the floor. Dark secret, however, I'm a banker. I work for one of the few global banks that's actually come through the crisis in better shape than when it started off. And it's partly from that kind of point of view that I look at what's happening to the Irish economy, the Irish banking system. And as a banker, or with sort of my research hat on as a banker, I first of all look at what's the policy moves in Ireland in the last 2 years as incompetent. Usually when banking rescues succeed, they are done fast, they're done aggressively, and governments lean into banks. The Swiss, the Nordics have been very, very good at that. We have been slow, we've been weak, and we've let the bankers do the running. Secondly, from a banking point of view, I just listened to some of the pronouncements from government, from TDs, recent ones, for example, on bond auctions being a success, simply being surreal. Because you can't claim that sort of bond auction where you're auctioning off bonds at 6.5% and your neighbours are doing so and say 2% is a success, so on and so forth. As an Irishman, I look at all this with extreme anger and extreme frustration, because I just don't see the cycle of delusion and denial being broken, and the cost of that would be deeper economic pain. And before I get into some of the detail on banking, what's going to happen next and what we should do, there's one or two points of principle where I think TASC and this conference is very, very important. Because in all the measures that have been proposed to address the crisis, there's a number of kind of recurring, quite deep faults. One of those is the lack of information. I think the reason to bail out Anglo-Irish and the reason to give the very, very broad banking guarantee was done partly because the policymakers had very, very little information on what was actually going on in the banks. And for months afterwards, the bankers, the leaders of AIB, Anglo in particular, kept revising upwards the scale of losses they had. If you go back 5 years, you look at a chart of banking assets to GDP. 3 countries dominated that: Iceland, Ireland and the Swiss. 2 of those countries failed. They were the 2 that were not prepared in terms of regulatory force and regulatory ability. The Swiss, if you look at FINMA, the regulator, or the Swiss National Bank, are replete with a lot of clever people who know banks inside out. And at the start of the crisis, I can tell you they were leaning into the 2 Swiss banks. They did what was ultimately a very elegant repackaging of bailout of UBS. So that's one lesson. I think we need more information on. And even the current situation where the opposition is demanding more clarity from the Department of Finance government on the national finances is another example of the same underlying problem. The second issue is debate in Ireland. This is where this conference is important as an alternative voice. Because what struck me as someone who's kind of stuck my head above the parapet a couple of times, like others, like Paul and Peter, is how first of all personalised the debate becomes very, very quickly. How quickly any alternative view is simply knocked down. A lot of our politicians are barristers, solicitors. They're very good at the bluster, very good at the questions and answers, and very good at sort of ducking and diving. They're not very, very good at policy. So I think an alternative to the debate and the forum that helps to rebut some of the delusions that are being offered us as policy is very, very important. The second point of principle is, I felt that from the sort of the point of depart, what the policymakers, politicians have tried to do, and I sound like a politician now, is that they've tried to save the banks and they've tried to save the bond market, but they've never tried to save Ireland. Sounds like a broad statement. What I mean in practice by that is that they've said, they've never said, well, what is required to engineer a recovery, to engineer a more balanced economy, and to avoid some social problems that will inevitably occur as a result of this crisis. Instead, they've tried to reflate the old banking system, which is rotten to the core. Lately, they've been focusing for some reason on trying to make life as easy as possible for the bond investors at the expense of Irish citizens. The latest, and we discussed this yesterday in one of the forum, the latest spectre, or the latest, if you like, focus of government attention is the EU. We're now being told we have to engage in various kind of masochistic kind of economic gymnastics to please the EU, sort of the 4-year plan, etc., etc. But never ever have we had a strategy for Ireland. And in just a moment, when we come to some of the things that maybe should be done, that's I think is an important starting point. From in terms of what's next over the coming 4 or 5 months, first a word on the international banking sector. There's been a whole range of proposals, be it at the G20, etc., which is meeting this weekend, on how to reform the global banking system. Stephanie and other people we know, Abby, have been involved in that. And to an extent, I think the banking system has, I wouldn't say gotten off lightly in terms of regulation, but it's not greatly changed compared to, say, 6 years ago in terms of the global banking system. It is greatly changed in that there are far fewer banks out there. A lot of institutions have gone, and an awful lot of bankers and people have lost money. A lot of alternative investors, hedge funds have lost money, so pain has been taken there, perhaps less so in this country. I think there is less emphasis in the bigger banks on the sort of the casino banking. At the margin, some banks have reduced prop trading, some have not. I think in Asia there is I would point to Asia as a very, very interesting test case of a region that is trying to grapple with very, very strong growth, a region that is looking at the lessons of the credit crisis in the West. And China, if you like, it's very, very interesting because they are trying to sort of slow the pace of the expansion in the housing market. But bubbling under, there are a lot of banks that are lending aggressively. There are a lot of the abuses in terms of mortgage lending, people lying in terms of applications, etc., etc. A lot of the urban district investment councils in China have a lot of debt. So it's almost like a sort of chapter 2 of the credit crisis in some respects. We have to see will they learn the lessons from that. I'd also point the opposite end to European countries like France that again we mentioned yesterday have had a whole series of banking crises in the last 3 centuries. And the French banking system perhaps bears the scar tissue of all of these crises. And as a result, it's quite conservative, certainly in terms of retail banking and mortgage lending, it's quite conservative. Some of the derivative parts of the investment banks may be more sort of racy or risk-taking. But France is perhaps what we may get to maybe after another crisis in terms of the shape of our banking system. So what's next for Ireland? I hate to be, I wouldn't say negative, but I don't see the short-term outlook being positive. And I don't say that to be a doom-monger. And again, I think an important part of the debate in Ireland is that even anyone who's tried to present a truthful but still quite negative view on the future is not back.
You're a constructive realist.
Well, thank you. Yeah, well. But I think one of the issues in the debate, and I think where there is space for rebuttal, is that people who have offered a realistic view have been knocked back as saying, well, stop talking down the country. God, you might scare the bond market, which is not true. The bond market's seen through all of this a long time ago, and they are denounced as being sort of unpatriotic. Whereas I think if you look at the history of this country, patriotism has always been a minority kind of sport, and patriots have always focused on the harsh reality. So I think the near-term outlook is potentially quite poor. I think the banking losses that are to come, if you factor in mortgages, etc., are going to be much bigger than government estimates. NAMA will not make a profit. NAMA will struggle. There are some court cases going on at the moment that are beginning to sort of pick holes in the operational logic and the operational practice of NAMA. AIB will most likely be nationalised, which again could be an opportunity down the line. Our bond yields will be high for quite some time to come, and that will have nothing to do with austerity. Very often people on the outside, or even people here who listen to the government, think the bond market is reacting to austerity. It most certainly is not. And I can tell you, as someone who works in the City of London, there is most likely little doubt on the part of bond participants, economists, etc., that Ireland can get its national finances back in shape at some point. What the bond market is reacting to is the toxic assets that are on the government balance sheet as a result of Anglo and the other sort of residue of the old banking system. And the bond market is pricing those as not even high yield bonds, but sort of junk bonds. In the same way it priced a lot of the Latin American debt, or some of the Asian debt in previous decades, as junk debt. And that's the simple reality of what's going on. So if you want as Brian Lenihan would say, if you want the bond market to be nice to you and to open up and lend to you, you have to get rid of the toxic debt. That's as simple as that. So that maybe leads on to some of the proposals. I think one proposal, again, started from the point of principle that we actually want a recovery, and that banking is not so much part of the recovery but a facilitator. Banking shouldn't be a big chunk of the economy itself. If you look at many of the accounts of banking in Wall Street, for example, in the 70s, 80s, read William Cohen's The Last Tycoons. It's a history of Lazar. Banking in the 80s, actually, until you had big deregulations, it was a small service industry in the States. And that arguably is where it should go back to be. It should be an intermediary of people's savings into investment. Simple as that. So, given that outlook, banking should be a facilitator of growth, and it should be a facilitator, importantly, of a kind of changed structure in our economy. AIB potentially will offer, as it becomes nationalised or majority held, will offer potentially a vehicle to that. I think one proposal I tried to push a year or two ago was to use the post office as a sort of a banking platform. And as potentially you squeeze some of the bigger banks, you have lots of unemployed banking staff, etc., software you can use to build that up as a kind of a national banking platform. So that's one starting point. One of the lessons globally from the credit crisis is that volatility forces policy change. There's an index in financial markets called the Vix Index, and it's an index of market volatility. And it's quite nice because if you look at the Vix Index for the last 2 or 3 years, you've got all these big sort of spikes, like a big mountain range. And every spike that we've had, it spurred or sparked a policy reaction, be it early on interest rate cuts, and then we had sort of direct interventions from the central banks, and then we had all these credit vehicles, TARP, etc., etc. And then each time market pain drove policy action, and it's definitely one of our friends. I think one of his 7 cardinal rules of markets. I think that's one of them actually. It always sticks with me. So I think in Ireland we may well see U-turns, and those U-turns will likely be brought on by severe market pain, perhaps in the bond market, perhaps in the share price of some of the banks that are still actually quoted. I think that kind of pain in a way is useful, because we or at least our policymakers should use that as kind of an opportunity for sensible U-turns in some of the damaging moves that have been made. I personally would be comfortable with reneging on all the senior bondholder debt of Anglo. I think the point of principle of helping Ireland, I would put Ireland ahead of anyone who signed on to the balance sheet of Anglo-Irish, and I'd be very happy to do so. And banking friends that I've run this by in London would say, I'm sure the bondholders are kind of ready for that anyway.
Here.
It's just the people in the Department of Finance, government buildings are not. I think they just don't see these things, partly because it's a question of expertise, partly of denial. And a couple of other things very, very quickly. I think there is, and not just Ireland, but in the EU, something for the future, because I see the frightening confusion of people when banking is discussed on prime time, times, all that. It's something in future we must educate ourselves on, and also the other areas that could be problematic in future, being climate change, I think. So there's probably greater need for public education. Finally, there's always been a big savings puzzle in Ireland. I felt that Irish people have never given their savings to Irish businesses to invest. Things like business angels, venture capital, etc. in this country have always been very, very weak. But in recent decades they've been delighted. So in future we need to direct Irish savings back to Irish companies. Irish companies at the same time have to present viable growth opportunities. I thought actually some of David Begg's proposals in the last meeting were quite sensible. Getting Irish pension funds to act partially almost like private equity funds for some infrastructure projects. I think that's quite sensible, and quite a sensible way of trying to squeeze some kind of stimulus back into the economy. To your point this morning, Stephanie, I'm not sure what I have Irish pension funds buying Irish bonds yet, because I think they could go down by more. And I would only do that if I thought it was a sort of a no-brainer buy, and I'm not sure if that's the case at this stage. So maybe on that I'll finish, because I know a lot of you will want to maybe comment from your own points of view.
I'd like to first of all thank for what was 3 very constructive doses of realism, but very positive suggestions at the same time. And I think there was although stated in very, very different ways, there was somewhat of a consensus around certain ideas, the need for state investment, or perhaps a state investment bank, or whether it's through a nationalised Irish bank, or whether it's done through a completely new institution, is a question I'd like to open to the floor. I'd also like to open the question of reneging on the senior bondholders, and whether anyone in the audience would have contemplated perspective.
There was 7.9 billion due for redemption at the end of September. That 7.9 billion would have been part of the 10.2 billion or thereabouts at 30th of March 2009, indicating that it was owed debt that was issued and subscribed to prior to the collapse of the system in September 2008. So I was extremely upset as a citizen of Ireland that 8 billion, call it rounded, of senior debt was redeemed on the 30th of September, quietly, camouflaged by the announcement of the 50 billion losses to the Irish banking system. Which 50 billion isn't right? The losses are 66 billion, at least in the NAMA-type loans across the 5 banks. And I can show that. I have a few handouts here. I won't interrupt the flow. And as the dentist said to me the other day, if I'm causing you pain or boredom, raise your hand and I'll stop. But anyway, Mr. Lennon announced that 50 billion as being the scoped out bottom of the losses. And that's not true. Because in Anglo alone, and I won't blind you with figures, but these are very easy peasy stuff. It's ladybird simple. Anglo-Irish Bank had a loan ledger of 72 billion when the crisis flew up. Now they're dividing that 72 billion into loans going into NAMA and loans being retained. They were going to try and break down the loans being retained into good bank and bad bank, and that nonsense has stopped and passed. Rightly, Anglo will be closed over about 7 years. But the loans that transferred to NAMA were written down by over 60%, or are being written down by over 60%. And there's nothing to show that the remainder loans aren't in a similar predicament. They're just different, maybe, classifications across the cross-section of types of loan that are Anglo advanced. But anyway, that 72 billion hasn't moved for 2 years. They haven't added to it, except a very small amount to capitalise interest, and they haven't received any repayments. So it's been struck like a beached whale. So whether it goes into NAMA or stays in the bank, the question arises. This is the question that the government haven't been honest enough in addressing, and it's this: what will be recovered from that original 72 billion? And the answer, truthfully, by people who've been in the business of lending and property, financing and everything for the last 20 or 30 years, like myself, is they'll be extremely lucky if 30 billion is recovered from that 72 billion. What does that mean? That means the embedded losses are 42 billion. So that's Anglo. Just remember that 42 billion. Now in AIB, when Mr. Lenihan announced, let's just think of how the government addressed the problem of the banking sector and the panic that ensued. They said, let's do a toxic asset recovery vehicle. Let's do a wonderful piece of legislative architecture, creating the National Asset Management Agency that would relieve the bank of all these toxic assets that were advanced in a period of about 4 years. That was the heart of the matter. 4 years of really bad lending across the 5 banks. So we ease the banks' problems by getting rid of those. They will sell them, transfer them for the same price to this National Asset Management Agency, NAMA. That was the concept. And the concept was announced on the 7th of April 2009. Then the bill came out. Mr. Paul Gallagher, the Attorney General, and leading firms, branding firms of solicitors, got down and designed the NAMA bill. And the Oireachtas rightly said when the bill came out in July 2009, that's not good enough. It may be a wonderful piece of legal architecture, but we want figures on it, please. We want a framework, a financial framework of the scale of what we're signing up to. We're not doing an open check. So Mr. Lenihan went away for the summer and came back on the 16th of September with the fruits of the PwC listing of runners and riders for NAMA, and the figure was 77 billion, and that 77 billion was across 5 banks, and the loans, 77, would be bought for 54 billion. Now, again, we just pause for a moment and remember, what does that mean? That means that there's 23 billion of loan losses being recognised across 5 banks. And again, the information gap or vacuum, which Michael referred to there, was serious because they never told us where that 23 billion was going to be. So we had to sort of guess it on a pro rata basis as to the losses totaling 77 billion, or the loans totaling 77 billion. But the figure of 23 billion was wrong, and they knew it was wrong, could have known, and if they were trying to delude themselves, well, that was wrong too. Because even at that stage, before you really got forensically into the portfolios, it could be shown that the losses were 40 billion. So when NAMA was eventually passed on the basis of a framework showing 23 billion of losses, that was wrong. That was actually misleading, and I'd put it further, it was fraudulent, because they said there were no other alternatives, that any other assessment was wrong. And that was wrong, because I met Mr. Lennon on the 6th of November before the Dáil passed the legislation, and I told him at that stage that I was upping my figure of proven losses of 30 billion to 40 billion. And he said, "But Peter, that's huge. I never met him before." And I said, I know. And if you see a train crash and all the carriages are smashed, they're smashed. There's no point in trying to pretend they're not. But he said, but who would pay for that? And I said, this is the opportunity. The opportunity is divided in two as a starting point. 20 billion for bondholders and 20 billion for the state as a starting point. He said, we can't do that because we've a wonderful structure here of 54 billion purchase price by now will produce 5.4 billion of profits per business plan, and that 54 billion will allow us to go to the ECB with the 54 billion in bonds, or 52 billion in bonds, and borrow for liquidity purposes so the banks are back in liquidity. So I then presented him, I said, Brian, no, can't happen. There's the summary of the banking sector, the balance sheets, which I'd done in advance of the 16th of September. I said, that sheet, single sheet, which your department should have produced, and could have, and have all the resources and the fellows paid to do it. Here it is. And he started looking at it and concentrating. And I said, what about the supplementary information in the NAMA bill, which is a pathetic document of 33 pages?
Peter,
that proves that there could have been no liquidity or credit improvement.
But Peter, I think it's a brilliant analysis. But
Yes, excellent of using that for daily banks, for investing in infrastructure, long-term investment in infrastructure, as long as it's profitable, because obviously, the liabilities and assets to pension funds will then be very well matched in terms of maturity. And one of the things that Avinash was pushing is this idea that people who have long-term money should invest in long-term assets, and this is very good. I wanted to ask Marie, on this issue of whether you should use your existing banks, which we just had a total disaster, but which you have taken over, for which you have paid masses of money, to lend to SMEs and do useful things, or just to create new institutions. Because the problem that you raised is if they lend new money with a guarantee scheme, that will happen anyway, because you could always have a case where you create a new institution and the new loans will go partly to pay the loans to the old bank. So I think it's a judgment on how the institutions work. But it seems to me that since you have 90% ownership in the bank, since you have some relatively reasonable staff there, they can't all be fools, then maybe you could just do it more quickly. Because what you need to get the credit to the SMEs out is now, create jobs now. And therefore, it'll take time to get a loan guarantee scheme bank going. You have to go to Parliament and all this kind of stuff. Whereas these are banks that could be operationalized. They're fast, but still they're there and they belong to the government. So I think that there are trade-offs there.
Okay,
is that the reference there that the property market, that it's necessary to have economic growth in order to prevent, and the inference there is that the property prices are going to fall even further, and therefore the NAMA liabilities are going to increase. But I would take considerable issue with that, because the property bubble was the very reason that this whole thing, exploded in everyone's face. So if we're to create a just and equal society and a sustainable society, then surely to God we let the market happen and let the prices fall. After all, a house is a house, it's not an investment. It's not your pension, it's not your security. So we should let the property prices fall, and particularly for people in the small indigenous industries who cannot afford the rents. So I would just question that as a policy. And then just one other comment was in relation to the Labour policy of using the pension fund for investment purposes in small businesses, that we could similarly use some of the investment to retrofit all of those housing estates that were built over the last number of years that are seriously damaging to people's quality of life. So we need to retrofit those in terms of energy efficient homes. And that we could kickstart the construction industry from a better in a better way. I mean, a lot of the empty homes should be knocked anyway, because they are unfit for human habitation. They're not in areas where people want to live anyway. So I think just those two comments I'd like to make. Thank you.
Okay, I'm going to let
Peter
Marie
at the
respond.
moment, and Peter is being, tracking with figures and
Marie, one of the things, and I don't want to interrupt, Bank of Ireland aren't out of the woods.
No,
They need
not
six-
at all.
They need 6.5 billion of capital.
Yeah, absolutely. But specifically with regards to AIB, because we're not sure whether Bank of Ireland will
I'm
use
sure.
it. Okay.
Yeah.
Well, anyway, but the thing is,
I
you
know.
know, do we try and I suppose efficiently use state money to try and get AIB back on track? I suppose it comes down to the efficiency of state resources, right? There is need obviously for lending, but similarly the money that's going to AIB, do we try and generate a return from that money over the medium term and get AIB back to some sort of health? Or do we just consider that AIB should be nationalised over the long term, in a permanent state of nationalisation, and then, have it filling those sort of roles that we were talking about there? And I think that's the big choice. But it's with regards to, the rate of return basically for Irish money going into AIB at the moment. And I think that has to condition the choice. But I think, what Jim and Michael were saying would probably be an awful lot more relevant than anything that I have to say on that, because I'm not a banking expert.